A small, I guess, pullback today, but I guess we're both playing a little bit of catch up back to back, really.
Exactly. The Chinese market had to rise substantially on the first day of trading on Friday after the long holidays. So it wasn't surprising that they moved by about 5%. And I think that further gains are in store for the rest of the year because Chinese growth in the second half is going to come above market consensus. Q3, for example, 9.5% year on year we expect. So there will be a lot of momentum in expectations of earnings recovery, and as a result, Shanghai Composite should end the year at 3,200.
So you're looking for a continued acceleration of growth going into H2. I guess we heard from the leading state think tank earlier on saying China's economy likely to grow by 8.3% and expansion could hit 9% next year, which clearly signals that the government is fairly confident of hitting its growth targets.
The government has every right to be confident because the size of its stimulus package for this and next year combined is almost 16% of GDP, much more than in any other country, and they have implemented it very fast. As a result, we think that this year's growth will actually be even higher, almost 9%, and almost 10% for next year. So definitely outperformance not only versus the rest of the world, but compared to the government's own target.
Tell me about export and import numbers. We get them out, of course, later on this week. What do you think that we're going to get? And, of course, these currency movements that we've been seeing over the last, 2 to 4 weeks, really, are clearly going to have an impact on the markets there.
Yeah, we expect that both Chinese exports and imports will continue to be well below year-ago levels. For exports, we see a drop of 20.5%, for imports of 14.5%. But starting in November, the growth rates will turn positive, partly because demand in China and abroad is improving, but largely due to the very favorable base effects. And the currency issue, what happened over the last month, of course, will not have any direct impact on near-term data. But overall, there is some negative factor for China, namely its currency has been stable throughout the crisis, while those of many Asian competitors have depreciated. So China will not benefit as much for global recovery as, say, Taiwan or Korea, because PBOC has maintained a stable exchange rate policy against the US dollar.
Darius, what's the PBOC likely to do in terms of tightening? We're hearing, I guess, more and more, there's more market talk, that it might be before it was originally expected, I guess you could say. Our previous guest didn't seem to think so, thought probably first half of 2010 would be when we'll see some sort of move from the PBOC. But where's your forecast, Dan?
I expect that PBOC will begin raising interest rates in the first quarter of next year. The reason why they will wait until 2010 is that much of the growth in the Chinese economy comes from public spending, and they want to see private sector picking up the baton. It will not happen easily. Also, they want to see a recovery in foreign demand. So my bet is that they will wait until the Fed moves first, which to them will be a confirmation that the global economy is safely on the recovery path, and then they will start raising rates early next year, and also they will begin to increase the RRR, the reserve requirement ratio.
All right, okay, Darius, we've also got Cheng Lei, who'd also like to have a chat with you. Lei, jump in here.
Hi there, Darius. Given the positive outlook for the economy, how do you feel about the markets?
I think that Chinese markets have corrected too much as a result of the slowdown in the lending growth. And I also believe that loans will grow in China in the fourth quarter of this year by more than in the third quarter, more than investors expect. So a combination of superior growth performance, accelerating expansion, and somewhat faster lending growth will have to improve sentiment and boost valuations. So I think that by the end of the year, the index will be substantially higher, Shanghai Composite trading around 3,200.
Any sector favorites, given that property and resources were the best players in the first half?
I do not look at sectors, but it makes sense to expect that the resource sector will benefit from overall trends in the global markets, where I anticipate further gains in both energy prices and metals. So this will be one that is relatively safe to play.
Darius, let me ask you, it does seem unlikely, but as an investment strategist, what sort of reaction on the marketplace do you expect to see from the formal relaxation of the rules on inbound portfolio investments? Now, I know these did come into play on the 29th of September, and a lot of the larger international fund managers are not using up their entire allocation anyway. But regardless, do you think that we are going to see any sort of reaction on the market?
I think that the reaction has already come with the pre-announcement of the new rules. The reason for upside from increased quotas and shorter holding periods that will now come to place is that investors perceive such moves as a push by regulators to help the market move higher. So this is very variable for sentiment, but I don't think that much will happen when the rules actually come into play.
What about decoupling? There's been a lot of talk about China decoupling from the US, and the focus very much for markets really this week is all about the US earnings season. I mean, how much do you think that Chinese equities are going to be impacted by the movements that we see over in the US this week?
I think that Chinese investors will look at particularly U.S. investment bank earnings as a sign of direction of global equity markets. And some correlation will still be here between China and the U.S. But Chinese investors are more likely to focus on local data because clearly the market there is driven more by domestic factors and domestic policy rather than what's happening externally. But again, I think that the data will be favorable. So I think that both on the U.S. earnings count and on domestic macroeconomic numbers count, the direction for Shanghai Composite this week and throughout the fourth quarter is upwards.
Okay, all right. Darius, great to have you with us today. Thank you so much for joining us. Darius Kowalczyk with us there from SJS Markets. Well, let's get back to Cheng Lei now. Of course, we've got the Shanghai market breaking for lunch in around